Ladies and gentlemen, people of the internet, if you are a Bitcoin investor, you're considering buying Bitcoin, this video is for you. Today, I will break down the fundamental reasons why Bitcoin has exploded in price in 2021 to over $50,000 US, and why I believe that the trend will continue in 2021 and beyond to prices that we can only dream of today. Now, if you're looking for in-depth but easy to understand information about cryptocurrency from the perspective of a developer, make sure you get subscribed and hit the bell, but I know your time is valuable, so let's hash it out. So what really makes Bitcoin worth $40, $50, $60, or even $100,000? If you're on crypto Twitter, if you've listened to one of the various Bitcoin celebrities speak, you've probably heard the common refrain about the fixed Bitcoin supply of 21 million Bitcoin and the idea that scarcity drives the price of Bitcoin. But let's go deeper, because it's too easy for big name Bitcoin haters to imply that the supply of Bitcoin is in fact not actually limited to 21 million and you could just easily create more. The good news is that we have the actual source code that each node in the Bitcoin network runs that enforces the protocol's supply limit. So it takes pretty much less than 30 seconds to prove without a shadow of a doubt that 21 million Bitcoins are the maximum fixed supply limit that there will ever be. So let's go ahead and do it. Let's head over to GitHub and I can time it to show you how fast it is for me to prove to you that there's 21 million Bitcoins that will ever exist. You can go to the Bitcoin Core source code, find the exact place where the supply cap is defined, and you can take a moment just to contemplate and understand how the protocol itself is enforced, and then you'll realize that there is in fact a hard supply cap that is known and transparent. The supply cap is enforced by a simple algorithm or a simple calculation that manages the block subsidy. And the block subsidy is basically the release of new Bitcoin into supply by way of block rewards for miners who validate transactions into blocks. Anyone who says that Bitcoin supply is not fixed simply needs to be referred to this code and prompted to get educated on how a decentralized protocol is enforced by hundreds, thousands, or more nodes in a network. So now that we know that Bitcoin is truly capped to 21 million, and that means that only 1/4% of the 7.8 billion people on Earth right now could own one Bitcoin, or that if even 1% of 7.8 billion people on Earth had demand for Bitcoin, there would be 4 times the demand as there is supply. 1%, the math is simple. Bitcoin is scarce, there isn't enough to go around, and if demand continues to increase, likely so will the price. And that's a great topic to pull on more, that demand and supply curve idea. So let's analyze further to see where these claims of 100K Bitcoin are actually coming from and if they're possible. Now, as you know, one of the core tenets of Bitcoin is the predictable, continuously reducing or reduced rate of supply inflation by way of mining up to the total cap of 21 million Bitcoin. We talked already about the block subsidy being the means by which new Bitcoin supply is released into circulation up to that cap, but what we didn't talk yet about is how that rate of inflation or new supply released into circulation is continuously reduced. The rate of inflation in Bitcoin is continuously reduced in a predictable cadence. A protocol enforced cadence of 210,000 blocks, which is about an average of every 4 years, the Bitcoin protocol undergoes naturally what is called a halving. And this is an event where the block subsidy is cut in half, effectively halving the rate of inflation on the network. Now, this change further enforces scarcity because it means that less Bitcoin is released into circulation to be bought by retail and institutional investors on the open market. Now, at the genesis of the Bitcoin network in 2009, 50 Bitcoin were released at every block as a reward. So that subsidy was 50 Bitcoin. In 2012, that reduced to 25 Bitcoin. Then in 2016, that reduced to 12.5. And now here we are sitting in 2021, we're sitting at 6.25 Bitcoin per block reward. Ultimately, in 2021, this equates to a really scarce asset. At an average block time of 10 minutes and the current block subsidy reward of 6.25 Bitcoin, you get 144 blocks per day multiplied by 6.2 Bitcoin released into supply per block, and that gives the open market a maximum of 900 new circulating Bitcoin to work with per day. Now, that is, of course, assuming that miners are not hoarding that Bitcoin that they earn and that they're letting it flow into open markets. Of course, there are always people selling Bitcoin too, so the real open market supply is higher, but 900 new circulating supply daily is really, really small. and it reinforces this feeling of scarcity on the market. There are institutions buying thousands of Bitcoin in one fell swoop. And so this supply constraint, more specifically, the fact that institutions and retail investors are demanding Bitcoin in large quantities and very little is being added to the supply on the market every day, is what's pushing prices to these all-time highs that we've seen in 2020 and 2021. It's fundamental economics. People want an asset, which constitutes demand, and that asset is scarce. There's a limited amount available in supply. High demand and dwindling supply tends to enforce higher valuation, the laws of supply and demand at its finest. Now, this is what's driving Bitcoin's price, and this is why so many people believe that Bitcoin is heading for $100,000 and beyond in the months and years to come. Of course, speculation does play a part, and skeptics are the first to point this out. However, speculation is a part of every market, be it stocks, be it gold, real estate, and more. And so this is not an argument against Bitcoin. People speculate, human beings speculate, and that doesn't mean Bitcoin does not have fundamental value. So fundamentally, the big push from 2020 highs to the constant new all-time high prices we've seemed to see in 2021 is driven by demand and scarcity. Single institutions, like I said before, are buying up more Bitcoin per day than the 900 being earned through mining subsidies. And if hodlers or holders aren't selling, there's not enough Bitcoin to feed the demand, and off we go to new all-time highs. Now, in 2024, when the next Bitcoin block subsidy halving occurs to 3.125 Bitcoin per block, you're only going to have approximately 450 Bitcoin released into supply every day. And if demand continues to increase to that point, what do you think is going to happen to the price? If demand is static or increasing, the price will likely respond with an increase as well. So you see the trend there. You see what this is built to do. Reducing inflation over time, a fixed supply cap, and demand that is the crux of valuation. That's the recipe. Now, none of this is to say that Bitcoin cannot go down, because it can, and it has throughout history. When you're watching this video right now, we could be in a period where we're lower than 50,000, maybe even lower than 40,000. But when people start selling and taking profits, this is normal. Supply and demand works in the opposite direction too. So when you zoom out though, and you look at the macro trends for Bitcoin, you can see that in its entire 11-year existence, it's trended upwards with volatility, big bumps, big drops along the way. Now, if you believe in Bitcoin's economics, you believe in Bitcoin's core value proposition as a store of value, you will likely be a part of the group that views Bitcoin as a long-term investment to protect and grow your spending power in the face of inflation and other economic forces in the world that devalue one's assets and are completely out of your control. Even with 11 years of trends to look at, it's far from a guaranteed win or a promise of generational wealth, and it surely is not a get-rich-quick scheme. But with fundamentals like these, I personally like the odds on this bet. And your own risk appetite and valuation of this asset will of course differ from mine, and I hope it differs from mine because I'm but one opinion in the masses. But I encourage you to use good judgment and good risk management practices and not overextend in any investment, including Bitcoin. If you're risking money that you need to survive, you're not investing, you're gambling. So I tell you not to gamble. Now, if you have any questions, feel free to leave them in the comments down below, and I will answer absolutely as many as I possibly can. But if you also want to get more really interesting cryptocurrency content, I have a really awesome video about the best place to buy Bitcoin in the United States of America with as little friction and low fees as possible. So thank you so much for all the time you spend watching my content. If it's your first time here, thanks for being here. And as always, I wish you and your family a wonderful week ahead. And until next time, cheers.